Top three things in my notebook this morning. Number one, volatility. That would be U.S. equity volatility and volatility in every other asset class, I might add. Point number two will be the Russell 2000, and then point number three will be Europe. So just to get into it, these are three things we've been focused on, obviously, throughout the year. And if you look at the manifestation of volatility, for one, what you've seen is a breakout above our intermediate term trend line, which is, of course, 11.94, and now a raging move to the upside on the order of 64%. From one of the most asymmetric lows in front month volatility that you will ever see in your career. Now, it depends on how long you want your career to be, and this can end careers or it can start them. But at the end of the day, when you buy any equity, particularly levered long beta equity and or growth equity, or something like, just pick something without earnings, that is not a good idea at 10 in the VIX. So again, 10.32 in the VIX, July the 7th. The Russell 2000 is down 7%, pretty much in a straight line from there. And now you're starting to see early cycle stocks like industrials, which I wrote about in the early look note this morning, follow the lead of the Russell. Now the Russell, again, down 7.2% since July the 7th. Is obviously down 3.7% for the year to date. So this might be the first time, and we're seeing a lot of first time in evers in U.S. stock market history, where the bullish narrative will say that a bull market is signaled by 2,000 stocks being down for the year to date. Now, of course, in the face of that, the Russell 2000 is down 3.7%. If you're long the long bond, which is the best way to be long slow growth, you're up 11.4% for the year to date in TLT terms. So again, look at what's happening, not what you want to happen. The market obviously doesn't care about your position. And again, if you want to have the right one, that's up to you. Now, Europe across the board, and again, the Russell's broken across both the bearish trade and trend durations that we signal here at Hedgeye Risk Management. Now, finally, in Europe, and I'll just hit on this quickly because we've been hitting on it consistently, Europe remains bearish trend across every single European equity index. So again, that includes the FTSE, the DAX, the MIB index. We've listed the ones that we don't like on and on and on. So I'm not going to tell you anything other than what we've been telling you for literally over a month. The manifestation of what happened yesterday in the U.S. stock market was multiple factors across multiple durations. It's from Europe to U.S. volatility to fixed income volatility and back again. The world is interconnected. It's also nonlinear. And we will reiterate our Q3 slowing call here in the U.S. and our Q3 macro theme of volatility asymmetry. So those are your top three things.